Everyone, turning our attention now to the world of sports gambling, as some of the big names in the betting industry like Penn National and DraftKings are reporting earnings this week. We want to welcome in Yahoo Sports' Josh Schafer to help break it all down. Josh.
Yeah, Brad. So we got Penn Gaming down about 5% right now after reporting earnings this morning. They actually beat on revenue. They came in with revenue at $1.56 billion, above analyst estimates of $1.53 billion. But really, I think what investors are worried about here is the earnings per share coming in significantly lower at 29 cents per share. The estimates were for 43. Now, when we talk gambling stocks, guys, we're not always talking about earnings per share really as much, right? Because so many of these companies aren't profitable. That's not the model Penn has gone for. Penn bought a content company in Barstool. They haven't been in New York. They haven't been spending. They're sort of going a different route than DraftKings and FanDuel and trying to leverage that brick and mortar. So then when they're not producing the profitability that investors are looking for, I think that's where people are starting to get worried. Is the spending model sort of waiting for profitability in 2023 or 2024, like a FanDuel or DraftKings, more advantageous at this point because Penn isn't even in New York and it's the biggest market. And I think people are starting to get a little worried about that.
So as we take a step back and look at the companies that we've heard from thus far, Caesars, I think, also reported. I know you followed online gambling very closely. Right. So what are we learning from these numbers as to how it's going so far?
Right. So I think one thing that was interesting with Caesars was they spent more than anyone when New York first opened. They had the most aggressive promotions. They'd match $2,000 for opening bets, things like that. They had these big promotions. People were grabbing them, and then they cut them off. And they cut back marketing spend by $250 million last quarter. And it's still were able to grab about a little bit over 25% market share. So I think that was interesting to see. As they cut back, are they still able to keep market share? For Caesars, it worked. And the other thing I think we should be watching here, guys, is when we talk about digital gambling, we love to talk about sports gambling because it's fun, right? It's fun to talk about people betting on Tom Brady.
Win, I win.
Right.
Yes.
But iGaming is becoming a big thing as well. And that's something that Caesars mentioned in their call the other day. CEO Tom Reeg said he thinks iGaming is going to be the key that gets their digital book to profitability by the end of 2023.
What's the significance of them still launching in certain markets a brick and mortar capacity and an actual location, like we saw in this most recent quarter, the sportsbook in Louisiana, and then even more so what that experience looks like?
Yeah, I think really what they're trying to do with that is give some kind of in-person connection to what they're doing online. I think online is going to be where a lot of these companies make their money at this point because it's such a big spend to build that brick and mortar. And are people coming back or are people not coming back? I think we're all still trying to figure that out in the entertainment industry. And when it comes to gambling, so many of these companies already have the advantage, like a Caesars or an MGM, Penn in some areas. So now as they build out into sports gambling, it seems like the online companies are trying to dabble in it enough to have that experience, but that's not quite where they're headed.
And we haven't mentioned it, I don't think by name yet, but we're showing it up on the board, DraftKings, and that's out tomorrow with its numbers, right?
DraftKings reports tomorrow. We'll have CEO Jason Robins on with us in the afternoon, so look out for that. It should be a fun conversation. But I think really what to look for with DraftKings as well is how they are spending and how they're viewing their spending. Because to this point, it's been acquisition. They actually just acquired an iGaming company earlier this morning as well. They finalized that deal. So where are things going with that, I think, is interesting to watch. And with DraftKings and FanDuel, the content war is something we're following very closely right now. They're creating their own content. They want it to be a same screen experience. And I think if they're able to do that but not spend so much money, I'm interested to see and hear in the call tomorrow how much they're talking about spending on content. Is that going to be the future? Do we have to only watch sports in these apps? Are they going to eventually get broadcast rights? It's a lot of money when you start adding all that up, so I'm curious where that goes as well.